Good morning, everyone. This is Rick Pruscia with Premier Marketing, joined in the office with Christy Johnson today. And we wanted to invite everyone on this webinar to talk about Kemper. Kemper and their home health care policy. It's a plan that there's other policies out there like it, but this is one of the ones that, to my knowledge, it's one of the oldest ones out there. I think it has been on the market since about 1994. So this is a product that has definitely made an impact in the industry. This is a product that has so many ways that it can fit into your block of business. It's not just a product to look at as a last case insurance situation for clients that can't afford or can't get underwritten for other care plans. It's also something that can fit into your clients' portfolios to fill elimination periods or for old policies to offer some home care. So that's one reason that I wanted everyone on this call today to be aware of this product, and I definitely want to try to get you as informed as possible to make you dangerous out there. So without further ado, I want to hand you over to Jack Broughton, the Vice President with Kemper. Jack, thank you very much for joining us, and without further ado, take it away.
Yes, good morning, Rick and Christy. Thank you so much for allowing me the opportunity to talk just a little bit about Kemper Health's home health care plan. And like Rick alluded to just a few moments ago, this plan has been around for a long time. In fact, I believe it was February 1995 when this plan was introduced to the consumers. However, at that time, it was only available through our career agents at Reserve National, which is one of the companies that Kemper owns. They are out of Oklahoma City, Oklahoma. Once we began to offer this plan to the independent agents like you and I, we started it back in August of 2012, and boy, it was taken by storm. It seems like, especially when you look at 2017's activity as far as policies sold, we increased 63% from 2017 to 2018, and that's a lot of business. Thousands upon thousands of clients are able to capitalize on the Kemper Home Health Care plan. So thank you so much for being a part of today's broadcast. I do trust that today's information will be both informative and insightful to you. This webinar PowerPoint presentation will take about 35 to 38 minutes, and I'm sure that you may have some questions throughout the broadcast. If you do, I believe that Rick and Christy are going to handle them from a chat arena where they are, and if they do not have the answer, I'll make sure that we get the answer from compliance, new business, claims, whatever the question may be. If we don't have the answer, we'll get it to you. So with that in mind, what are we going to cover today? Well, today's home health care webinar, I'm going to touch on Kemper, a history of excellence. I'm going to go over the outline of coverage for the home health care plan. And just to let you know, I'm sure there's a lot of folks that's visiting today's webinar that are from states all over the country, and I'm going to be using the state of Kansas as an example. The plan varies from state to state. There are a few nuances that makes it a little different everywhere. However, those that may be joining today's broadcast from the state of Texas, this plan is considered a long-term care plan. So if you want information on Texas itself, just reach out to Rick and Christy, and I'm sure they'll get all the information to you. Outside of that, the other 32 states where this plan's approved, it's pretty much like the one I'm going to cover today. I'm going to go over the basic plan for Kansas, the home health care benefit, the home health care aid, the prescription drug benefit, which I feel is the sizzle of this plan, and then also the rates. Fourthly, I'm going to go over the extra benefit rider, the benefits and the rates. Fifthly, triggers, home health care application, and miscellaneous forms. You notice over to the right where I've got a little shout out, if you will, that with this type of plan, peace of mind starts here, and I do hope that by the time we're finished with this broadcast, we'll make that come alive and make sense to you. Okay, Kemper. Well, with over 7 million policyholders, and that's a lot of folks, ladies and gentlemen, that have placed their faith and confidence in an insurance company to provide property and casualty, life, health, ancillary products, and investments. 7 million, that's a lot of folks has placed their confidence in us. And you also see that there are over 30,000 agents and brokers throughout the country that take the good news of Kemper's products in the way of the career agents. We've got worksite marketing, and then also the independent arena that I'm over here at Kemper Senior Solutions. With over $11 billion in assets, Kemper employs well over 7,800 associates throughout the country. Now, I mentioned briefly that I'm going to be using the state of Kansas as an example. You see right there, I'm circling Kansas forms. So just keep in mind this, what I'm going to be going over today applies to the state of Kansas, but all the other states is pretty much the same. Right there, you see the brochure, and inside the brochure, there's going to be all the features of the plan, the extra benefit rider features, and also the premiums for the plan itself. I'm going to open that up, and we're going to talk about that as well in future slides. There's page 1 of the outline of coverage. Going to hit on that. There's the application. Lastly, there's the medical supplement, the medical form. This form here, let me put a little blue check marks here. What does those 3 check marks mean? Well, these are the 3 forms that make up what I'm calling the app packet. Now, you're not going to see that verbiage anywhere. I'm just using it for the sake of this training webinar today, that these forms make up the app packet. However, the last one to the right, the medical notice, that form is signed by those folks that you take care of that are eligible for Medicare. So if they are not eligible for Medicare, or in other words, 65 or 64 and under, you will not need to have this form as a part of the app packet. Let's take a closer look at the outline of coverage. You're going to see here, this is page 1. And why am I kind of talking about the OLC? Well, the outline of coverage is not the policy. However, it is the forms that gives the client more of an in-depth detail of what they are purchasing, and then also what the agent's selling. So the outline of coverage is very, very important. And you'll want to make sure that you're using the outline of coverage for the state where the client resides. Look in the lower left-hand corner, I've got a star there. That star represents the form number for the state of Kansas. I'm also putting a star up near the top. The reason I'm putting that star there by that item is because it's to let the client understand that what this plan is not. It's not a Medicare supplement plan, and that's what's kind of highlighted there by that star, but also what it is not as well. It's not an MA plan, and in the state of Kansas, it's not a long-term care plan or a final expense plan. What this is, it's a 1 year or less home health care only. So you need to let the client understand that it's for home health care use. And it's not for like nursing home or assisted living and things of that nature. And then another star that I'm going to put here is where we're talking about the benefits under the base plan. Now, I'm going to explode that more in future slides, but on page 1 of the outline of coverage, it kind of goes in detail of how much it will pay per occurrence in the event that their physician says they need this care at their home. Also, the last thing I want to cover on page 1 is a wonderful feature of this plan, and it's called the restoration of benefit. This has a lot of sizzle to its feature, and I will cover the restoration of benefit and make it come alive in about 8 slides from now. On page 2, what do I want to highlight here? Well, look here, there's a prescription drug benefit plan. I'm really going to spend some time on this rider, which is a part of the base plan. There's no additional cost for the prescription drug benefit rider. It's a part of the base plan itself. But once I show you that in about 4 slides, the prescription drug benefit rider almost pays for the entire cost of the base plan's premium, annual premium, because I think that we can come to a conclusion, and we've all been in this industry for a while, that the vast majority of the folks we talk to are on prescription drugs. Now, if they're on prescription drugs, that means that if they have this plan, that they can get reimbursed up to X amount of dollars. I'm going to cover that here shortly, in the event that they have prescription drugs filled at a pharmacy where the prescription is for an illness or a sickness. So I'll make that come alive a little bit more here in a future slide. Optional benefits. Well, there's an optional benefit rider, and it's totally the prerogative of the policy owner if they want to have this part of the plan or not. What's included in the EBR? That's the acronym for extra benefit rider. Well, there's an annual physical exam. There's a vision benefit, a hearing benefit, an ambulance benefit, an in-hospital private duty nurse benefit. I'm going to talk about that, all of this in future slides. On page 3, a couple things I want to cover here is look at that star by guaranteed renewability. What does that mean? This is a wonderful feature of the plan. And I know that you've probably heard me use that tag, that this is a feature of the plan. These are things that you want to make sure that the client has a good understanding of the features of the plan. Remember I talked about the restoration of benefit? Well, the guaranteed renewability clause on page 3 of the outline of coverage is something that you'll want to bring up to them as well. Let me just give you an example. What this does is give peace of mind to the client, knowing that regardless of their future health, this plan is guaranteed to renew. In other words, it can't be canceled because of future health. All the client has to do is to make sure that the monthly premiums or annual premiums are continued to be made. That's the only way that a client can lose the plan is if premiums are not made. And I know that makes sense, but it's always good to make sure that you kind of bring that out to the client to give them peace of mind that this plan is guaranteed to renew regardless of their future health. Now, you're going to notice right there, you're going to see something, well, I've got it highlighted, and it says that there is a one-time policy fee of this plan. Well, there's no longer a policy fee. We stopped having policy fees on this plan throughout the country probably about 3 years ago. So just keep that in mind that doesn't even exist. All right. Now, the last thing I want to pull out here, ladies and gentlemen, before I go into the next slide, is where the signatures are on the outline of coverage. This is where the agent signs it, the client signs it, the city, the state, and the date. So make sure that you bring these forms that you see right here on the screen back with you because it goes in a new business. It is where all the signatures are. But I do strongly advise that when you're going out to see your client, regardless of where you are, and some of you may sell non-residently, which is fine, is just make sure that a client, that the proposed insured gets a copy of the outline of coverage. So bring some extra copies with you and leave one with the client. But of course, the one with all the signatures, you bring back with you. Let's take a closer look at the base plan. The home health care benefit, now this is very, very strong, that if a client goes on claim, now when I'm talking about going on claim, that means that a physician fills out a claim form telling the claims department that they need this care. Well, if they go on claim, they can get a maximum of $150 a day for 365 days in the state of Kansas. That's a $54,750 benefit, potential benefit that they can get if this goes on claim. Now, the second bullet here, and this is very, very strong, and since this is an indemnity product, and indemnify means to restore, to make whole, is that if they go on claim, that it's an indemnity plan. So it doesn't matter if they have other plans similar to this. They could have a Medicare plan, a MedSup. They could have an MA plan or a plan similar to this. Or they could have a long-term care plan or a group plan. So it doesn't matter what other plan they have, if they have any, this pays over and above any other plan that they may have. It's not a coordination of benefit plan. So just imagine if a person goes on claim, and let's say they're on claim for this entire continuous 365 days. Well, they would get a check, checks or whatever it comes to, an aggregate of $54,750. That's a lot of money where the client can use this money in any way that they want. It's their money. Also a part of the base plan is the home health care aid benefit. Now, what is that? If their physician says that they are in need of a home health care aide, this is someone to come into their home and help to take care of ADLs or whatever it may be. You might want to get a copy of a specimen policy, which is out on the agent portal. If you don't have it, I can make sure that we can get it to you. But if they go on claim and in need of a home health care aide, they could get $40 a day up to 60 continuous days, which is another $2,400 maximum benefit. And this right here has nothing to do with the one above. See, these are two different benefits within the base plan. Wonderful plan as we start building it. And then we go on to the next slide. What is covered under the base plan? Well, let's look at these things to the right. Highlighted in green, there's $50 a day for interosseous therapy, like a stomach issues or respiration therapy. $60 a day for general nursing care by way of an LPN or an LVN or chemotherapy specialist services. There's $75 a day. Skilled nursing care by way of an RN. Physical therapy, speech pathology, occupational therapy, and lastly, medical social services, which is $100 a day. Now, before I leave this slide, let's make sure that I'm clear on this one thing. Jack, are you saying that it will pay those dollar amounts to the far right in the event that they are in need of all of that care? Well, you feel for a person if they need all that care, but that's a great question, isn't it? So just remember that it's an aggregate. It's a max of $150 per day for a continuous 365 days. Now, I mentioned briefly about the prescription drug benefit. I really feel, this is my personal opinion, that this is a sizzle of the plan. And why am I saying that? Because the vast majority of the folks, and just think of the many folks that you know and that you've came across, whether they participated and bought a med sup off of you or an MA, long-term care, ancillary product, final expense, it doesn't make any difference, that are on prescription drugs. Well, if they're on prescription drugs, they're going to get reimbursed just by this being a part of the plan. And as you see right here, here are 3 actual receipts of a client of ours that had prescriptions filled at a drugstore called Walgreens, which I'm sure you've heard of. And it could be Walgreens, CVS, Eckerd, or a Walmart. It doesn't make any difference. It's just these are actual receipts. And you'll notice, what have I circled? The retail price of a filled prescription. So that's what we reimburse off of, not what they pay out of their pocket, ladies and gentlemen, because you're going to come across folks that have prescription drugs filled that they may pay nothing, or maybe a copay or something minuscule, if you will. But in this case, and what we reimburse off of is the retail price of the prescription that's filled. So if you see these 3 right here, let's do a summation. If you add those 3 together, what's the retail price? $373.97. Well, in the state of Kansas, once the first $50 deductible is met, it's not that they pay it out of their pocket. It's the first $50 deductible that would have been that is used to calculate the premium or reimbursement. Once that is met, you'll see in this case the net amount is $323.97, isn't it? Well, this policy will pay 80% of that net amount up to $250 in the state of Kansas. So let's keep that in mind, that $250, and go to the next slide, because we're going to ask ourselves, is it affordable? Well, the actual premium for age 65 to 70, and it's non-gender specific, so it doesn't matter if it's male or female. Age 65 to 70, the annual premium is $432.75 for the whole plan. And what's the base plan? Remember, it's the base plan. Remember that $150 a day for 365 days? And then also the home health care aid. If we've come to a conclusion that the vast majority of the folks we talk to are on prescription drugs, let's just carry that on over to this slide. If the annual premium is $432.75 and they're reimbursed $250 because of the prescription drug benefit, the effective yearly expense is what? $182.75. That's $1,523 is the effective monthly expense. Whoops. So before I go to the next slide, which I almost did, is it worth $15.23 for a person in the event that they are needing home health care benefits, like the home health care aid or the basic benefit plan or whatever it may be? Is it worth $15.23 for peace of mind? And another thing we ask ourselves, how many folks do we know? I mean, it's on this call. How many do you know that had to recover in a nursing home or assisted living, but would rather recover at their home? Most people would rather recover at a home because that's where their personal artifacts are, if you will. That's where their lounger is, their pictures, their home, their spouse, their children, and things of that nature. And over 80% of all the long-term care claims that's for home health care use are a year or less. This plan is a perfect fit. So then as we go on to the next slide, I just want to show you this real quick. How simple is a prescription drug claim filing process? How simple is it? Well, I could send this to you, Rick and Christy, if you don't have it. But here's just some snippets, if you will. There's no claim form required. Now, you're going to need copies of the receipt, as I highlighted 2 slides before, that reflects the retail price. But as far as a claim form, doesn't exist. Number 2, there's no waiting period. So let's say, for example, and I'm just using Rick as an example, say he has the plan. He has prescription drugs that are filled on a monthly basis. Once the policy is issued, he can begin to send receipts in on filled prescriptions from that point forward. Now, of course, you can't reach it back in the past and get prescription receipts on past prescriptions because a policy wasn't issued. But after the policy is issued, he can start sending in receipts on prescription drugs that are filled at a pharmacy and at a drugstore and issued by a physician or a pharmacist, if you will. So let's say that he is on Zocor or Synthroid or whatever the drug is that he's been on for 5 years. Once he starts getting those prescriptions filled, he can start sending them receipts, and he can send them in at any time. Claims can be submitted at any time and will be processed as received, and the policyholder will be notified when the max is received or the benefit has reached its max to be paid out. Every policy year, once that year's over, it starts all over again. So it's based on a policy year, not a calendar year. So what's needed when the claim, if you will, is sent in? Well, you need a copy of the receipt that reflects the retail price, right? I've kind of hit that quite a bit. That includes the patient's name, their policy number, the policy number of their Kemper policy, the date of the service, the name of the prescription drug, the retail cost. Remember, the retail cost is what we reimburse off of, and then also the name of the company that's just distributing the prescription, like Walgreens or CVS or Eckerd or Walmart, whoever it may be. So I look at the base plan, ladies and gentlemen, as having 2 buckets of benefits. Number 1, what's in the first bucket? Well, you have the basic benefits, which are the base plan, the basic benefits, and then also you got the home health care aid benefit. In the second bucket, you have the prescription drug benefit plan. These 2 buckets have nothing to do with one another, okay? So a person doesn't have to be on claim under the first bucket to be able to get the prescription drug benefit plan, or vice versa. So when we go into the next slide, let's take a look. Is it affordable? This is the rates for Kansas. And if you see age 46 to 55, that's the same premium, $26.40 a month, $316.80 annually. You're talking about 88 cents a day. And then we used age 65 to 70 as an example, didn't we? And you're seeing it's $36.05 monthly, $432.75 annually, and that equals $1.21 per day. And before we go any further, let me mention one thing. You're going to talk to clients, ladies and gentlemen. It's going to say, wow, you know, I can afford this, especially with the prescription drug benefit reimbursement. I can afford this. Well, they can have 2 plans. So if a client has two plans, not only do they have a $150 a day benefit for 365 days, now they have what? It's two policies. Now they have $300 a day. And instead of $250 on the prescription drug reimbursement, what do they have? $500. Everything doubles. You'll go into a home. I've seen this happen too many times. And over 65% of the people buy two plans because it's affordable. And they see the value of the plan. They see the base plan, the aid benefit, because people would rather recover at their house. Remember, I mentioned that earlier. And especially the prescription drug benefit plan. So you can go into a home, literally, talk to a husband and wife and walk out with 4 plans. Who wins there? Not only are you able to take care of your family because you just made 4 sales, if you will, but you provide a peace of mind for your client. If you got a husband and wife, you've provided $600 of a daily benefit in the event that both of them's on claim. That's my illustration. But also $1,000 in prescription drug benefit reimbursement if both the husband and wife have 2 plans. So you see, who wins? 3 people win here, 3 entities. Not only do you win for you and your family, but also the consumer you're talking to by giving them the good news of what's available to them. And the issue rate on this plan, ladies and gentlemen, is up near 100%. You show it, you're going to sell it. It's going to get issued. And the persistency is out of this world. People, once they have this, they see it, they keep it. Persistency is key. So you have 3 entities winning. Not only do you win, not only does the client win, but the company wins. Everybody wins. Now, one thing I want to mention before I leave this slide is a question that may come up. Do those rates increase? You see it right here. Look in the lower left-hand corner. Do premiums increase with the insured's increased age? And the answer is yes. It's a 5-year graded premium. So you're going to see, look at age 51 to 55. That premium's $26.40, isn't it, a month? When they get in the next 5-year bracket, it goes up to $27.75. And every 5 years it goes up. Everybody's getting older, aren't we? But the key is that you can take care of people from age 41 to 85. In other words, you can write clients up on this plan that's between those age ranges, 41 to 85. Now, once they're over age 85, you can't write them up anymore. However, if you've taken care of them in that age range, this plan stays with them as long as they pay the premium payments. Let's talk about the EBR, the extra benefit rider. Now, I've moved about 28 minutes into the broadcast, and we're right on time. As we look at the extra benefit rider, what's included? I mentioned to you I was going to talk a little bit more about it, and here we go. You have an annual physical exam. Once this rider's been in effect 12 months, if they have an annual physical, they'll get a check for $150. Also, there's a vision benefit. After the rider's been in effect 6 months, $40 for a vision exam. How many people do you know, and a lot on this call, that wear glasses or contacts or whatever it may be? Well, if you go in for a vision exam and you just get the exam, $40 is sent back to you. And also in that same 6-month period, $75 for lenses and frames, and that includes contacts. There's a hearing benefit. How many of you get hearing exams? If you get a hearing exam, 12 months after the rider's effective date, $50 for a hearing exam. And then also there's a hearing aid. What if they need a new hearing aid? After the rider's effective 12 months, $250 for a new hearing aid. Now, that's every 2 years. Also, there's an ambulance benefit. Now, what's key about this, what triggers this benefit is while the client is receiving benefits under the home health care or the home health care aid. In other words, they have to be on claim for either the home health care benefit or the aid. If they are, and they are in need of an ambulance, $100 from the home to the hospital, $100 from the hospital back to the home, a $200 total benefit in any 12-month period. Lastly, there's an in-hospital private duty nurse. If the policyholder is in need of an in-hospital private duty nurse, they will receive $80 a day for 30 days, another $2,400 potential benefit if they are in the hospital and in need of an RN. Now, one thing I want to mention, this benefit is not payable for a nurse who is a member of the insured's immediate family. Okay, let's go to the next slide. This is how I look at the whole plan. Let's say that the client wants the whole kit and caboodle. They want the Cadillac plan, which would be all three buckets. So what's in these three buckets? And this is a strong visual. I even suggest you using this as a visual for your clients so they understand what are they getting. Well, they're getting three buckets of benefits if they want all of it, which is the home health care basic benefits. What's in that bucket? Well, you have the base plan and you have the home health care aid. And then you have the second bucket, which is the prescription drug benefit plan. That's a bucket all by itself, isn't it? And then you have the third bucket. What's in that third bucket? Well, you got the extra benefits, which is the annual physical exam, the vision, the hearing, the ambulance, the in-hospital private duty nurse. You got a lot of stuff in that bucket. So let's say that the client says, I want all three buckets, which they can. This is what the premiums look like. Well, look at age, I've just circled 46 to 50. It's less than $50 a month. Now, remember the prescription drug benefit plan? It starts to chisel away the annual premium, doesn't it? Instead of $595, if they have full reimbursement on all the prescription drugs, they're really paying only $345 annually if they have all three buckets. And then, and of course, that's $1.65 a day, but remember age 65 to 70 that I use as an example, less than $60 a month, $717 annually, less than $2 a day. So keep in mind, you can sell two plans, can't you? So just imagine if you're able to put in the client's lap two plans each in which they're going to capitalize sooner or later, because the vast majority of the people in sometime in their life are in need of home health care. And I think, and I don't need to beat this up too much, but we have to bring to remembrance that prescription drug benefit rider. If the vast majority of the folks are on prescription drugs, ladies and gentlemen, present this to them. Of course, it's up to them, and it's their prerogative to make a decision on whether they feel that that they are in need of a plan like this. But as we go on, let's look at some triggers. We got about another 7 minutes, and we're right on time. What is the policy triggers? Well, what's the policy triggers for the base plan? And this is right there in the outline of coverage. Number one, the loss must have incurred after the policy's effective date and while the policy is in force. Now, we're talking about the home health care and the home health care aid. We're not benefit. We're not talking about the prescription drug. We're not talking about the extra benefit rider, okay? Number two, the care. It has to be provided in their home by an approved home health care practitioner as defined in the policy, and then also in your home by a home health care aide if that's what's needed. Thirdly, that the client cannot perform two or more of the 6 ADLs or a cognitive impairment such as Alzheimer's or dementia. So these are triggers. I'm just kind of pulling them out, making them come alive for you. They're right there in the outline of coverage. Remember, I spoke a little bit about the restoration of benefit. This is such a wonderful feature of the plan. And let me kind of go over this and let me give you an example. That's the best way to do it. And then I'm going to talk about those two bullets. Let's say that Rick, I keep picking on Rick, but Rick is taking care of a client. This client that he's taking care of, let's just say they had the plan for 3 months. I'm just using that as an example. They've had the plan, and then they have to go on claim for whatever reason. The client is maximizing their claim. In other words, they're getting $150 a day. They've been on claim for 2 months. So if they get $150 a day over a 2-month period, that means that they would have received a check for $9,000, okay? Now, let's say at the end of that 2 months, these two things happen. Look at that second bullet, that the physician certifies that they no longer need the coverage, okay? They're off claim. They go off claim. Now the first bullet, Once they're off claim, and they've been off claim for 180 days, which is 6 months, okay, those two things happen. The physician says they do not need the care anymore, and then also 6 months go by. What happens? The plan restores back to day one as if they didn't even use it. See, that's the beauty of the restoration of benefit, because it's not they lose it once and they use it once and they lose it. It's not that. This plan restores, and there's no maximum amount of time that the restoration benefit can be capitalized on. And this happens with each policy. So if a person has two policies, they go on claim and they're getting $9,000 on each policy, that's $18,000, right? They go off claim, and then they've been off for 6 months. They both restore back to day one as if they didn't even use them. A wonderful feature of the plan. Now, quickly, about 4 minutes, let's look at the app. This is the Kansas application. And as you look right here, the very top, application for home health care insurance. That's what this is for. This is the app. You got the front, you got the back. This is it. Now, I want to stop here just for a moment. When you take care of a client, and if they want two plans, you fill out two apps. There's two outline of coverage. Now, we're working toward getting it all combined, but that takes just a little bit of time. This is where we are now. This is all you do. There's no MIB. There's no prescript check. There's no attending physician statement. It's issued off what you see right here, ladies and gentlemen. That's why the issue rate is so high, because it's so simple. So in quick review, before I go to the next slide, you see it's affordable. You see the need, the prescription drug benefit portion, up to $54,750 if they go on claim under the base plan, $2,400 if they need an aid, and then you got the extra benefit rider. So you have all this stuff bundled together, and you have to ask yourself this question: do they need what you have? And the answer is yes. What you have to do is just show them. If you make this come alive, and you talk about the guaranteed renewability, the restoration of benefit, the premium, and the power of the base plan and the extra benefit rider, it's not will they buy, it's why wouldn't they buy? Because all of us know someone, either directly or indirectly, that have been in a nursing home or assisted living, like I said earlier, that would rather recover at the house. So let's go on to the next slide. But before I do, if you look at the app, we talk about the applicant, the underwriting, there's the agreements and signatures, and then you got the bank draft authorization. This is your app. And as we take a closer look at it, and I want to really emphasize, this is the underwriting portion of the plan. This is what it's issued off of. And if you look at number one, it's just asking a question. Do you have any health insurance, including home health care, long-term care, or similar coverage in force at the time of this application? It's just a yes or no. It's not a knockout. But I want to skip one and go down to number 5. Do you acknowledge receipt of the outline of coverage? Please make sure that they answer, whoops, let me get that off. Please make sure they answer yes here. You need to make sure that, of course, the outline of coverage that you have signed, you bring back with you, correct? But leave a copy with them. Now, let's look at number 2, 3, and 4. If they answer yes to any of these 3, not all 3, but any of these 3, right here, which are number 2, where it talks about replacement. We're not in a replacement business. So if the client wants to replace what they've got with this, don't even send it in. It will not be issued. We're not in the replacement business. However, if a client wants to have this and other plans, that's their prerogative. If they want this and they want to cancel something else, that's their prerogative. We're not talking about cancellation. We're talking about replacement. Number 3, are they currently in a nursing home or assisted living facility or receiving home health care or similar type benefits? If they are, they're already on claim, right? Number 4, Are you physically unable to perform the ADLs? If they cannot perform the ADLs, that means they're on claim. So if they answer yes to any of those three, stop. It will not be issued. But this is your knockouts. And let me bring something else out to you. What did it not ask? It didn't ask if the client was diabetic or had heart condition or cancer or AIDS. It didn't ask their height and weight or if they was a smoker or a non-smoker. It didn't ask their family history. It doesn't ask that. All you have to do is ask these 5 questions right here and make sure that they do not answer yes to 2, 3, and 4. Okay? That's why the issue rate on this is so high. It's up around 98, 99%. That's what it is. And we have issued tens of thousands of these policies since we began to introduce it to the independent arena. Payment mode, how are they paying for it? Well, they can either pay for it annual or monthly. There's monthly is monthly bank or savings account draft. We do not do monthly, quarterly, semi-annual bill or credit cards because the persistency is just really bad. That's why the company has chosen not to offer those modes. Now, do they want the base policy? If they do, remember the 2 buckets, what's the premium? If they want the base policy and EBR, which is the 3 buckets, what's the premium? It's their choice, whatever they want to do. Now, I spoke briefly about a medical notice. If a person, now remember, if they are eligible for Medicare, they have to complete the medical notice. Very simple. It's just to let them know that the important notice to persons or Medicare, this insurance duplicates some Medicare benefits, and then also before you buy this insurance. It's just, okay, just make sure that they understand that what you're selling and what they are purchasing. And there's a place for the agent's signature, the applicant's signature, and the date. When you look at the app packet, what needs to be sent into new business? Well, you got a cover sheet, you have the signatures on the outline of coverage, the application, and of course, if the person's eligible for Medicare, the medical notice. That's it. This is all you need. And if I may say something at this point, you can either do a paper app or electronic app. Electronic, the issue rate is half the time of submitting a paper app. A paper app takes about 2 weeks to get issued. The electronic app takes about a week because there's no paper. And boy, is it smooth. But if you need more information on how to do an electronic app, once you are appointed, you go out on the agent portal. In the body of the home page is a tutorial, if you will, on the electronic app process and just frequently asked questions as well. Physician certification, remember, if a person goes on claim, this is what a physician's certification looks like. They have to sign it and date it. Then there's also a standard claim form filled out by the physician, then also the client. There's the supply requisition, order supplies, very simple. This is out on the agent portal. Frequently asked questions, as you know, as you can kind of tell, we have about 2 minutes left and we're right on time. Frequently asked questions, what are the more common questions? Can a person have more than one policy? Yes, they can. Remember, they can have 2. Nothing really on page 2 I want to cover. Page 3, please remember that the premiums increase with the insured's increased age and that they understand and know that as well. Well, this is where the plan is approved even as we speak. It's in 33 states. The states in green, it's pending, waiting for approval from the DOI. In the gray, like California, Florida, and up north, we haven't filed there yet, but we've got enough on our plate right now. Okay, now, we came to a quick close. If you have any questions, comments, or suggestions, please reach out to Rick or Christy. There's their contact information. And with that in mind, I thank everybody. Thank you so much for being a part of today's PowerPoint presentation. I'm going to turn this back over to Rick now. But if you want to reach out to me, if you got any questions or comments, there's my office number, 678-567-2238. And, of course, you can reach me at jbroughton@kemper.com. I'd love to hear from all of them, Rick, to be honest with you. What did you think about the presentation to those attended? What did you think about it? Was it clear? Did it make sense? I do trust that it was informative and insightful to you. Thank you so much. Rick, back to you.
Hey, thank you very much, Jack. Actually, I do have one question, and I was curious if you know it offhand. I know I've been trying to keep up with the questions as they come in, but the only one that I'm not sure of, and it's just because it's never come up in all the years we've been working with the home care product, as far as the electronic applications go, is an e-version of that sent out to the agent for their records? I know in the agent portal, obviously they can see all of their business, but I do know some agents like to have, like PDF versions of that on their own platform, on their own computer. Is that something that is sent out, or?
Yeah, yes, it is. In fact, that's an excellent question. In the event that a person takes care of a client, now I'm answering your question in a roundabout way. If a person is appointed, they're allowed to sell, they're out there selling, whether it be paper or electronic, they can go over to the apps that's submitted, and then once the policy is issued, they will have the ability to look at that, whether it's a paper app or electronic, and see all the demographics of the plan itself. So it's like a file, I guess, is the best way for me to put it. Did I answer your question?
Yeah, I think so. Yeah, I mean, that,
okay. Oh, it's
something
out
is
there.
Sent out, and something else that, I mean, I know you obviously touched on it regarding e-apps and logging into the agent portal and whatnot, how to take these e-apps. I do want to stress how much information the agents can find on Kemper's agent portal. It is something that it does a wonderful job of not being able to update. It's simple and informative on how to update your information, how if you're bringing on downline agents, if you have your own agency, how you can adjust the information on that, ordering materials. It's a very great tool for any agent who is working with Kemper. So definitely another reason to be working with this product, not only just for the product itself. So
yeah.
Other than that, I'm trying to think of anything else. I know we've got a couple other questions that I want to get back in contact with some of these people on here. We have recorded this presentation, so as we do get it formatted, we want to be getting in contact with everyone that joined us, getting to any questions we weren't able to answer. So by no means think that we're just going to ignore you, but I do know that we want to kind of limit the time on this so we can get you guys back out at the beginning of the week. So without further ado, Jack, on behalf of Christy and myself, thank you very much for the presentation today. And of course, we'll be in contact with you if there's any questions that Christy and I can't answer.
Fantastic. Thanks, everyone, for letting me be a part.
All right, everyone, have a great day. Thank you for joining, and we'll be in contact with you as soon as we're able. So have a great day.